Well, the SGX Nifty is indicating that the start will be well in the red. There's no reason to pause on rate hikes. That's the word coming in from the Fed, and that has spooked most global markets. But we have plenty of stocks to talk about, and our research team is here in full strength to help you with that list. So without wasting any time, let me start with you, Nigel. What are you looking at? Dalmia Bharat?
Well, that's right, Sonia. I'm looking at Dalmia Bharat, and it could be a relative outperformer. I don't know whether it'll open in the green because the markets are likely to see a sharp downtick, but the numbers look pretty good. You know, it's pretty much in line with what our poll threw up, and that's actually good news because a lot of their peers, well, they missed the EBITDA estimates by big time, particularly ACC and Ambuja Cements. So when they deliver inline set of numbers, my guess is the street will like it. And keep in mind, second half of this year should be much better. Volumes are higher. We have heard about various price hikes as well. And also input costs will cool off. The capacity for Dalmia Bharat should move to close to around 49 million tons in the next 2 years. That's from around 35 million tons at the end of last year. So that's good news as well. And valuation-wise, there is comfort out there. It's always traded at a bit of a discount. It trades around 8.5 to around 9 times odd. But for a 50 million ton unit, trading at around 8.5 to 9 times, where it has some valuation comfort as well. So going with green on this one. But Abhishek, what about you? You're tracking Mahindra and Mahindra Financial. They came out with their numbers and operational update as well.
Well, Nigel, to begin with the operational update, it looked a bit weak, when compared to asset quality and collection efficiency. However, the monthly disbursals in October is at 13-month high of about 5,250 crores, which is up nearly 29% on a month-on-month basis. The gross NPA ratio for October is at 7% when compared to 6.7% as of Q2 FY23. The collection efficiency for the month of October was at 91%. This compares to 98% monthly collection efficiency for September. Coming on to Q2 FY23 results, the quarterly disbursements are at 16-quarter high, coming in at 11,824 crore, which is up 82.5% YOY and about 24.8% on a sequential basis. The loan growth pretty strong over there. The on-balance sheet loan growth is at 21.6% YOY, perhaps a 14-quarter high, and the AUM growth, which takes into account the securitized portfolio as well, is at 13.8% YOY, which is a 9-quarter high. However, PNL is not, balancing the growth that you are seeing in the business momentum. The net interest margin has declined quarter on quarter. The operating profits have declined massively by 15% YOY and about 8.7% sequentially. So in terms of our poll, the NI is a miss, and there is one exceptional item of about 54.5 crore, which has led to PAT missing our poll. Back to you.
All right, thanks a lot for that. So that's an M&M Finance, but let's find out how Relaxo Footwear and Gati did this quarter around. Mangalam, over to you.
Well, as far as Relaxo Footwear is concerned, it's a howler of a result, because the revenues, while they declined about 6%, the EBITDA actually halved from, 117 odd crores to just around 60 odd crores. And as a result of which, the net profit has fallen to 67%. The margins have fallen into single digits, 8.9%. And that's perhaps the lowest that we've seen in the last many quarters, if not the history of the company. The company says that the decline is primarily on account of, volumes of categories serving in the masses. And that affordability has hurt their demand, and at the same time they've cut their prices also as raw material prices cooled off, but they were still sitting on high cost inventory. Expect that stock to be deep in the red in today's trading session. But apart from that, Gati, well, the numbers were not bad. You got a 9% revenue growth, but importantly, their EBITDA margins expanded by 60 basis points. They were the lowest in the industry, and they've been guiding for EBITDA margins to improve. So it's good to see that that is on track. For the first half, their volumes have grown by about 28%.
Right, Mangalam, thank you very much for that. Keep an eye on those names. Class A truck orders out of the US, Sonia, how are they looking?
They're looking good. And, this is the second month running that the Class A truck orders are above 40,000. So clearly, the trend has improved in the US in terms of, the heavy commercial vehicles. This time, North American Class A truck orders came in at 42,500 units, which is a 75% growth on a year-on-year basis, and it's above 40,000 for the second straight month. Now, ACT Research, which is the research firm that puts out this data, said that OEMs have now opened their order boards for 2023. The reasons for the strong Class A truck orders is the ongoing pent-up demand. There are tailwinds from strong carrier profitability and elevated fleet age, which is proving resilience. Now, they're also saying that there is a very clear visibility from OEMs for a strong first half of 2023, and hence the orders are flowing in thick and fast. In fact, if you look at the monthly trend, the data is looking good. I mean, compared to an average of 15 to 20,000 between June and August, it's gone all the way to 40,000 plus in the last 2 months. Positive for Bharat Forge, Ramkrishna Forgings and GNA Axles.
Okay, all right, Sonia. Thanks for that. Well, let's hop across to Surbhi. She's here to tell us about a couple of other numbers. Jindal Stainless and JK Paper. Surbhi?
For Jindal Stainless, the earnings are marginally better than what the analyst has estimated, but overall a weak set of numbers. The revenue is up 13% on a year-on-year basis. EBITDA came in at 411 crores, down 42% on a year-on-year basis, but better than some analyst estimates of 392 crores. Margins came in at 7.5% versus 15% same time last year, and this is due to higher other expenses and power and fuel costs, which were both up approximately 40% on a year-on-year basis. Net profit is down 48% at 189 crores. Next is JK Paper. They have reported a beat on all fronts. Their revenue is up 74% at 1,644 crores, which is the highest ever quarterly revenue that they have reported. And this is largely led by the volume growth, which was driven by the capacity expansion in their packaging board facility. Their realizations were also up despite high input costs. The EBITDA is up nearly 2.5 times on a year-on-year basis, and the margins are up 1,000 basis points at 33%.
All right, thanks very much for that. MTAR Tech and Triveni Turbine also reported earnings. Vahishta is here with details. Vahishta, hi.
Hi Prashant, good morning. Well, MTAR Tech has reported a good set of numbers for this aerospace and defense manufacturer. The revenues were up 38% to 126 crores. The margins though were impacted by some extent due to the high cost of raw materials, high employee and other expenses in this quarter. The order book is strong at 1,289 crores. And all in all, the company has reported good set of numbers in the first half of the ongoing financial year. But the company says that the second half is going to be even better on a sequential basis. The company is confident to achieve its FY23 revenue guidance of 55 to 60% on a year-on-year basis, and EBITDA margins could be at about 30%. For Triveni Turbines, well, also has had a healthy quarterly performance. The revenues have jumped 42% in the past quarter, which is owing to a strong growth in both exports as well as the domestic markets. The exports reported a strong growth of 93% on a year-on-year basis, while domestic market was up 18%. The total order inflows were also up 18% on year-on-year basis. Order book is strong at 1,100 crores. Also, the company has announced a buyback at 350 rupees per share, which is a premium of 24% from the current market price. And the buyback offer size represents 23% of the company's fully paid equity capital and free reserves on the consolidated levels as on FY22. So expect the stock to be in green today.
Right, thanks a lot for that. So here's a quick recap in case you missed out on any of the stocks with positive news flow. There's Dalmia Bharat, Bharat Forge, Ramkrishna Forgings, JK Paper, Gati, MTAR Tech and Triveni Turbine. While the stocks with negative news flow, there's M&M Financial, Jindal Stainless and Relaxo Footwear. But a lot has happened overnight with the Fed going at it with a 75 basis points rate hike and hawkish commentary. Not much happened in the world of crude. Brent is still around the $96 a barrel mark. But Manisha Gupta is here to give us a roundup of all the action from the commodity market. Manisha, morning.
Morning, Sonia. Thank you for that. Well, yes, the prospects of higher rates going forward as well is something that did give us a knee-jerk reaction in the commodities as a sector. But then it is about the individual fundamentals as well, which really seem to be working. The markets do believe that barring next couple of quarters, you could be looking at demand coming back. That's exactly what the crude prices are looking at. The reason we are still holding around 90 for U.S. crude and near 95, 96 for the Brent is, and this is at 3-week highs, by the way, that you have seen a constant decline in the U.S. crude inventories yet again in this week also. The OPEC and allies output cut have continued to decline. The latest data for the month of October shows that they are off mark and way off mark from their agreed quota. And then the European Union embargo that hits Russian oil imports on 5th of December is yet another thing that the markets are taking a cue of. And then there is a winter demand to look at as well. So you wouldn't really see a sell-off coming in case of crude oil prices until we continue to see these supply concerns. But that's about crude. That's the same thing that you are seeing in metals as well. After that initial sell-off, there is buying that has come back in copper, nickel. Gold and silver also trading in the positive in the Asian markets right now. So there is those shorts that seem to be getting covered at this point in time.
All right, Manisha, thanks very much for that. So that's commodities. We'll take a very quick break here. Up next, Nishal Maheshwari joins in, Centrum Broking, for some fundamentals stock talk. What does the market do here? I mean, that's the big question, isn't it? And what should you be doing stock-wise? So that conversation follows in just a bit.